Hi students, welcome to Sunil's tutorial. I'm Sunil Nirvani and today we'll be doing this chapter called as personal investment. We're going to do illustration 14 today. We're doing illustration 14 in the books of Mayur. In the books of Mr. Mayur. Investment account in equity shares of J Limited for the year ending 31st March 07. Right. Now here instead of debentures you have shares, so this will be date, particulars, working note, number of shares, dividend, cost, date, particulars, working note, number of shares, dividend, cost. Right, let's start. On 1st April 2006, Mr. Mayur had 30,000 equity shares in J Limited of book value of 4,50,000. Right, let's see this on 1st April 2006. 1st April. 2. Balance brought down. He had 30,000 shares, the cost of which was 4,50,000. Right, he had 30,000 shares in J Limited, book value of which was 4,50,000. On 22nd June, he purchased another 5,000 shares of the company for 80,000. On 22nd June, he purchased bank to bank. Debit what comes in, therefore I am recording it on the debit side. He has purchased 5,000 shares at a book value of 80,000. Right? The directors of J Limited announced bonus issue of equity shares in the ratio of 1 share for every 7 shares held. Right? Working note 1. Held bonus. Right? You are holding 35,000 shares. You are holding 35,000 shares. You had an opening balance of 30,000 shares plus you purchased 5 shares. You are getting a bonus of 1 share for every 7 shares held. Right? So in that case, how many shares will you get as bonus? You will get 5,000 shares. So this is on which date? The directors announced on 16th August. On 16th August, you will write to bonus issue. Bonus issue of 5,000 shares. Right? They've given you that the ratio is you get a bonus of 1 for every 7 shares held. How many shares are you holding before the date of bonus? 35,000. So you will get a bonus of 5,000 shares. Shares are coming in, therefore I am recording it. Yeah, they've given you the ratio. Right? Now, shares are coming in, therefore I am going to record this on the debit side. Since it's a bonus issue, I don't have to pay anything on it. So the cost value of it will be nil. Next, on 31st August, the company made a rights issue in the ratio of 3 shares for every 8 shares held on a payment of 15 per share. Right? So you made a rights issue. Working note 2. Held rights issue. Right? Now, how many shares are you holding as at the moment? You are 30,000. You purchased 5,000. You got a bonus of another 5,000. So total number of shares that you have is 40,000. In what ratio are they giving you the rights issue? 3 shares for every 8 shares held. That means if you are holding 8 shares, you will get a rights issue of 3 shares. Fine, do you get this? That means you are eligible. Rights issue eligibility
15,000.
You are eligible for 15,000 rights issue shares. Now, if you are eligible for 50,000 rights issue shares, that does not mean that you have purchased entire 50,000 rights issue share. Let's see this. On 31st August, the company made a rights issue in the ratio of 3 shares for every 8 shares held on payment of 15 per share. The due date for payment was 30th September. Mr. Mayur subscribed for 2/3 of the rights issue. So how much have you subscribed for? You have subscribed for 2/3 of the rights issue. That means for 10,000 shares, you have subscribed for 10,000 shares, right? So let's see this. You have subscribed for 10,000 shares. They are saying that rights issue payment is on 30th September. 30th September to rights issue. You are buying 10,000 shares. At what price? The rights issue price was 15 rupees per share. So 10,000 into 15, 1,50,000. Right? Next, the remaining entitlement he sold to Vinayak for a consideration of 2 per share. Now guys, the company had given you an entitlement that you could buy 15,000 shares, out of which you have purchased 10,000 shares. The balance shares you are selling to Vinayak. Is the company involved in this? No. Since the company is not involved, you will not have a transaction for this. Remember, most of the students make a mistake here. Whenever you have rights issue, the part you have subscribed will be recorded. The part you have not subscribed, which you have sold to a third party, will not be recorded. The part of the rights issue which is not subscribed and sold to third party is not to be recorded. Right? No, it is, how can the company do it? It's, the entitlement was yours. It will always be sold from your side to the third party. The company is already given its rights to you. Okay. Next, on 31st October 2006, received dividend from JAIL Limited at the rate of 20% for the year ending 31st March 2006. Received dividend 2006. This is going to be 31st October, right? By bank.
So we are receiving dividend. So what?
Debit expenses and losses, credit incomes and gains. Is this an income for me?
Yes.
So therefore it will be on the credit side, right? Okay, let's move on ahead. Let's calculate the dividend. First, let's calculate the dividend on my opening balance. My opening balance was 4,50,000. Dividend on opening balance. Dividend on opening balance, you had 30,000 shares. You had 30,000 shares. Each share is of 10 rupees, right? And the dividend announced is 20%. Can someone please help me calculate this? 60,000 if I am not mistaken. You had 30,000 shares of 10 rupees each and the dividend is announced at 20%. This is my dividend on opening balance. Now, dividend due on purchase during the year. Now, please pay attention here. This is another entry where most of the students make a mistake. You have purchased shares of 80,000. This was bonus. This was rights issue. Any gift or any benefit given to you by the company, on that particular benefit, in that particular year you do not get dividend. So, on bonus share and rights issue in the current year, financial year 2006-2007, you will not be getting dividend. So you will be calculating dividend only on the purchases that you have made during the year. During the year you have made purchase of only 5,000. So you have made purchase of 5,000. Each share is of 10 rupees. Dividend is 20%. Someone please help 10,000. See, how do I record this? The dividend which I am supposed to receive will be recorded in the dividend column. The dividend which has been made due will be recorded in cost column. Right? So dividend which has to be received will be recorded in the dividend column. Dividend which is due will be recorded in the cost column. Fine? Now let's move on ahead, guys. On 15th November, Mayur sold 30,000 shares at a premium of 5 per share. He sold 15th November. Debit what comes in, credit what goes out. Buyback. He sold 30,000 equity shares. He sold 30,000 equity shares. Right? Now, at what price did he sell them? He sold them at a price of, right? He sold them at a price of 15 per share. Now let's see this working note 4. So my selling price will be 30,000 shares at a price of 15 per share, that is 4,50,000. He sold them for 4,50,000. Now if there is a sale, I need to find out the profit or the loss, right? Working note 5. Before the date of sale, what was my cost and what was my number of shares? Number of shares. Before sale, the total number of shares I had was 50,000. 30 plus 5 plus 5 plus 10, 50,000 shares I had, and its cost value was 450, 680. 680 minus 10, 670. 6,80,000 on the debit side and 10,000 on the credit side. Now I am selling 30,000 shares. So in that case, what should my expected selling price be? Someone please help me calculate this. Someone calculate. Excuse me. 4,02,000. Actual selling price is 4,50,000. So this is going to be nothing but 48,000. I'm making a profit of 48,000, right? So this will come here. This is on 15th November to P&L 48,000. Fine, do we get this thing here? So you made a profit of 48,000. Next, they are saying that you are required to prepare investment account. That's it. All you need to do is tally this now. Let's see, how do I tally this? This is 50,000. This is, someone please help me add the cost value. 680, 728. Someone please cross check this. 50,000, 728,000. 31st. You're closing the year on 31st March 07. 31st March. By balance carried on. Balance carried on. Someone please get me this. This is going to be 20,000 shares, and you said how much is this? 268. Right? Tally the dividend account. So this is 60,000 here, 60,000 here, and this is going to be 60,000 here. Right? Now this can be written as this is going to be transferred to P&L on 31st March 2007. 31st March to P&L. Right? That finishes that sum. Please stop this here for the day. Thank you very much.